Hello and welcome back. This lesson is about pensions, and we'll look at the pension benefits of as far as taxation is concerned. I told you previously in the previous lessons that there are two types of pensions. Now you know what pension is because I've already mentioned what pension is. Pension is the amount which you save while you are working, so that when you get retired you can rely on that amount instead of relying on the government benefits. So that is called pension. Pension could be made in two ways. One is a personal pension, where you will be responsible, where you yourself will be responsible for the pension, and the other one is called the occupational pension, where your employer will be responsible for pension. So your employer will take something out of your salary, and he will make your pension. In personal pension, you will be responsible for your pension. So you can go to your bank and you can say, I want to make my own pension. Then you will be responsible for the pension, right? So that's why it is called personal. You are contributing towards it. As far as occupational pension is concerned, you might be paying, so the employer might be deducting out of your salary. It means that you are paying. Or employers say, all right, okay, I won't deduct something out of your salary, I will pay for the pension. So employer will be paying for your pension. So we'll see what are the tax benefits. Now, could you please move to your notes? I assume you have already downloaded the notes. I say again and again this word, just to make sure that you have downloaded it or not. Anyways, this is chapter 5 of the notes, of F6 notes, and it is pensions, page 17, please. I've already shared the screen. Now, it says pension and the types of pensions, occupational pension scheme and the personal pension scheme. I've already told you what these are. I haven't told you what is a maximum pension, a maximum contribution of pension schemes. Now, there is a limit, although you can make your own pension or your employee can make your pension, but there is a maximum limit which you can contribute into the pension funds. So what is the maximum limit? It says any amount can be contributed by taxpayer himself or any other on his behalf. However, for tax relief purposes, maximum contribution that shall qualify for tax relief is higher off. So, although you can contribute whatever you want, but the maximum amount which will be on which the tax relief will be available, it is higher of these two. What are these two? UK relevant earnings and £3,600. So it will be higher of these two. So if you're and in relevant earnings, it is not all earnings, it is relevant earnings. So in relevant earning, what are the relevant earnings? It is employment income, trading income, and income from this furnished holiday letting. So these are only three incomes. There isn't any other income in it. So that's why it is called UK relevant earnings. And the second amount is £3,600. So you can maximum you can get the tax relief on is higher of these two. Now, say for example, if your relevant earning is £5,000, and then in this case you will get £5,000 instead of £3,600, right? And likewise, if your relevant earning is £3,000, still you will get £3,600 worth of tax relief, right? So because it is higher of UK relevant earnings and £3,600. Now, in the note, it says if the gross pension contribution exceeds the annual allowance. Now, although there is a limit that you can get the relief on, but there is another limit as well, which is called annual allowance. Now, annual allowance for 15-16 and 16-17 for current years, it is £40,000, whereas sorry, there's a mistake in the note. It says 15-16 and 16-17. It's not, it is 14-15 and 15-16. I'm sorry for that. So it is current year, which is 15-16. Our tax year for the paper is 15-16. So 15-16 and the previous year is 14-15. So it is 40,000 for these 2 years, and the 13-14 and previous years is £50,000. Please make sure you rectify the mistake. So where it says £40,000, it is 15-16 and 14-15. And where it says £50,000, it is 13-14 and the earlier years. Now, interesting thing is that this limit will be given to you in the exam tables, so you do not have to remember it. Then it says if an individual has any unused annual allowance in the previous 3 tax years, then it may be paid in the tax year 15-16 without incurring a tax charge. So if anything is unused, you can still use it without incurring a tax charge. Annual allowance in the current year is treated to be used first, and any unused allowance of the previous 3 years will be used on the FIFO basis. Right? Then after that it says tax reliefs. Now, tax reliefs on occupational pension scheme and personal pension scheme is different. As far as personal pension scheme is concerned, I told you, and you know from your earlier studies, that you only pay 80% towards your pension and the other 20% is paid by HMRC. That is one relief of personal pension scheme. Now, another benefit of personal pension scheme was that it extends your basic rate band and higher rate band. So whatever you contribute, the gross amount of pension contribution will extend your basic rate band and higher rate band, right? Now, as far as occupational pension scheme is concerned, if you are paying, then it will be allowable deduction. So if it is allowable deduction, then obviously it is a relief. If it is allowable deduction, it means it will be deducted out of your salary and you will pay less tax on the salary because your salary will be less. However, if the employer is paying, if your boss is paying for occupational pension scheme, then it will be an exempt benefit. So this is the relief. Now, whenever in the exam it says something is exempt, say for example, if in the exam it says that something was exempt, like employer paid for the pension. Now, instead of just ignoring the fact, instead of just ignoring this fact, you should state in the exam that you know that it is exempt. So you should communicate to the examiner. So you should state that employer has paid for the occupational pension, so that's why it is exempt benefit. So you cannot just ignore it. You will have to state it, right? So that was our pension scheme, right? Now please make sure you check it on your notes, right? I assume yes, you have already downloaded the notes, so you can check it on your notes. All right. That's it for this lecture. We have already finished this. There's just a small chapter of pensions. However, there's one interesting thing is that the maximum contribution you can contribute is higher of UK relevant earnings and £36,000. All right, so it is higher of these two. Now, what you can do is on our website there is an example on our website which I made for P6 students. Now it is exactly the same, and it is relevant for F6 students as well. Now please make sure you go to ACCA P6 section, and you will find the lectures of P6. There you will find the lecture of pensions. Now there are two lectures of pensions. Now if you could please watch both of them as well, so it will make your concepts very, very strong as far as exam is concerned. So examiner can examine you, and it is important topic, so please make sure you make yourself comfortable with this topic. So after watching this lecture, it was just a small introduction of pensions. Please make sure you go to P6 section and watch the lecture of pensions. So there are two chapters of pensions. Please make sure you watch both of them so that your concepts will be stronger then. All right. So that's it for today, and I will see you in the next lecture. Thank you and goodbye.